Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now Bitcoin is still playing out this bearish divergence as the price of Bitcoin is now breaking to the downside in the short term. So I'll be talking about that in just a moment, alongside Ethereum, which is currently retesting this critical area of resistance, while the price of Chainlink is just about breaking below this critical area of support, while the price of Solana is coiling up ready for the next major move. So I'll be talking about all of that and more later in the video, so definitely watch to the end. First of all, starting off on the weekly Bitcoin chart, and right now Bitcoin is technically still playing out this bull market signal that confirmed around 3 months ago. And of course, the last couple of times this signal confirmed, we saw a bull market in the price of Bitcoin over the next 1 year approximately. But as I always say, during these larger bull markets, we can see short-term dumps along the way, or corrections or pullbacks during the larger bull market. And if we're taking a look at this weekly Bitcoin chart, as of right now, we're continuing to lose bullish momentum in the weekly Bitcoin MACD. But of course, we saw this exact same thing happen around 1 year ago. And so first of all, it was around October 2023, we first of all saw that bullish crossover in the MACD indicator on the weekly time frame. And then from that point onwards, we saw a massive bullish move from October all the way up until around early to mid-December. And we've seen the exact same signal confirm and play out this year, starting in around October, going up towards early to mid-December. And then right around early to mid-December last time, and also this time, we started to lose bullish momentum in this MACD indicator, telling us we're slowing down in the bull market and we're due to see a bit of a break or a setback in the short term. And right now that is exactly playing out. And so if we're looking at what happened last time to kind of get an idea of what could be likely moving forward, as always, no guarantees. Just because it happened last time, it doesn't guarantee it's going to be the exact same again this time. But just to get an idea of what happened last time we saw this signal play out, we continue to see a bit of a break from the bull market in the shorter term, as in over the next few weeks and even over the next 1 month or so, because it wasn't until around the end of January and even start of February here that we finally started the next major move in the price of Bitcoin. So in the shorter term, for a matter of weeks and even a matter of 1 month or so, we basically saw a lot of choppy sideways price action, which means short-term dumps and short-term bounces back to the upside here and there during the larger bull market. And so that is still the situation right now. We're still losing bullish momentum, taking a bit of a break in the short term, which is the expected outcome. This is what I've been saying over the last few weeks, and I continue to expect this at least over the next few weeks, likely until potentially the end of January. And if we're taking a look at this Bitcoin chart on the 4-day time frame, the super trend indicator is still sitting in the green, indicating a larger bull market. So technically speaking, on these charts right here, these larger time frames, they're still looking bullish in terms of the larger bull market here, but this chart in particular is telling us we're still due to see a break in the short term for at least a number of weeks from now, continuing a bit of either choppy sideways price action or a bit of a short-term pullback of some sort in the coming weeks. And the same can be said about this weekly Bitcoin chart, because we've already confirmed a massive bearish divergence on the weekly time frame, which is the first significant warning signal on the larger time frames that we're seeing during this bull market here. And of course, I've already been talking about this for around 1 to 2 weeks now on the channel, saying that a short-term pullback, or at the very least choppy sideways price action, is extremely likely in the coming weeks. And over the last 1 week, we've seen that exactly as expected. And once again, I continue to expect this little pullback, or at least choppy sideways price action, so a slowdown or setback, at least over the next few weeks, as the most likely outcome. And so just don't be surprised if we don't really see a lot of bullish price action in the next few weeks, and instead we just sort of cool off a little bit over the next few weeks. That is extremely likely. Do not be surprised if we see that price action potentially for most of January. But then if history is any indication, potentially somewhere around February or somewhere around March, those sort of months right here should be bullish if we're looking at history. And if we're taking a look at this Bitcoin chart on the daily time frame, technically speaking, this bearish divergence is still active, as I've been saying for weeks now on the channel, since all the way back around here. Obviously, when this bearish divergence confirms right here, I said it's extremely likely that over the next few weeks, we're going to see either a bit of a pullback in the price of Bitcoin, or at the very least, some choppy sideways price action as the most likely outcome from a bearish divergence. And since then, we've seen that exactly as expected. This sort of price action is is extremely likely after a bearish divergence, and I continue to expect this type of price action at least over the next few weeks, not just because of this bearish divergence, but also because of this bearish divergence that is now confirmed on the weekly time frame. And if we're taking a look at this 12-hour Bitcoin chart, of course, we're still finding a lot of resistance at this previous line of support, currently acting as new resistance. And right there, that was sitting at close to 100,000. But right now, because it's an ascending line right here, that is sitting at around 101,000 approximately. So if for whatever reason we see a major bounce back to the upside, expect a lot of resistance at around 101,000 and also around 102,000 as another point of resistance. But before even those levels right there, we also have resistance in this price range based on the volume profile indicator sitting in between around 97,000 to 98,000, acting as short-term resistance. And as for support, we do have some important support at roughly around 92,500. As we can see, we've seen multiple bounces over the last 1 week or so from pretty much exactly 92,500. So that is the important level of support to pay attention to in the short term. But we also have a bit of an area of support in between around 91,500 to 92,500 based on this area in the volume profile indicator. So around 92k, give or take, expect short-term support right there. But if we start breaking below around 91 to 92,000, in that case, the next important level that I'll be watching out for is at around 87,000. And if we break below 87,000, that could be bad news for the coming weeks. But obviously between now and then, we have a lot of other levels of support to pay attention to. And if we're taking a look at the shorter term, looking at the 6-hour Bitcoin chart, technically speaking, over the last 1 day, we have now confirmed a break to the downside below this ascending line of support, which did confirm with 3 touch points, as we can see. But now this line of support is broken, which at least in the short term is obviously a bit of a bearish signal. Anytime where we break below a line of support, that is clearly bearish. And that line, in case you're wondering, was sitting at roughly around 94.4k, and right now it's sitting closer towards 94,500. So in order to invalidate that break to the downside, we need to get back above that line, ideally with candle closes on this 6-hour time frame back above around 94,500 in order to invalidate this break to the downside and invalidate the potential price target for this bearish flag pattern. And also, in case you're wondering, this line of resistance is sitting at approximately $100,000. So if we were to see a bounce back to the upside, expect some resistance right there as well. But when it comes to the technical price target for this potential bearish flag pattern, which is technically now confirmed based on this candle closes right here below this line of support, looking at the flagpole price target for this bear flag pattern, that is sitting at approximately 85.9k. So right around 86,000 as a technical price target for Bitcoin right now. But once again, if we break out back above this line right here, back above around 94,500, in that case, that would invalidate this break to the downside and invalidate this bearish price target. So for now, technically speaking, we do actually have a bearish price target in play at around 86,000 approximately. But as always, we cannot ignore support levels that we have between the current price and this bearish price target. So even though we have a price target at around 86,000, we can still bounce from support, like for example, 92 to 92,500 around there. We could potentially continue a little bit lower and then bounce at that support. That is a possibility we need to consider. And so when it comes to trading opportunities like this, let's just say, for example, if you were to open a short position now that we have broken to the downside to trade this move towards the downside, personally, I like to take profits at around major levels of support. In the case of a short position, this is because, in case you're new to all of this, a short position makes money when the price goes to the downside. And so, of course, the biggest risk for a short position would be if the price turns around and flips back in the bullish direction. That would be the worst case scenario for a short position. And so due to that, personally, I like to take some profits out of a short position just before a key level of support. So for example, as we're running into around 92 to 92,500, potentially around there, I'll take a small amount of profits from a short position. And then if we break below around 91 to 92,000, potentially I'll take a little bit more profits at just before 87,000 because that's important support right there as well. And as always, when it comes to these trades right here, I place a stop loss on the other side of the point of invalidation in order to avoid any further losses in the worst case scenario. So let's just say if we bounce back to the upside, break out back above that line right there to invalidate this trade and invalidate this price target, a stop loss would essentially trigger right around here, for example, on the other side of the point of invalidation in order to avoid any further losses. And then if, for example, we continue in the bearish direction, direction. Personally, I like to move my stop loss at the very least up towards my entry price so that it's break even and ideally into profits as the trade moves further into profits, so that in the worst case scenario, if the price just comes back to the upside in the case of a short position, that would hit the stop loss and close the trade automatically in profits if the stop loss is sitting in profits. And when it comes to a possible short position like this, of course, if we see some sort of retest with a small bounce like this and then a rejection from this previous line of support to confirm it as new resistance, that would be another bearish signal further confirming this break to the downside. So that could be another potential signal to add or open a short position, to add to an existing short position or potentially open a new short position if we see some sort of rejection from around 94,500. But as always, that is not personal financial advice because I don't know your personal financial situation. I'm just simply sharing potential trading strategies when it comes to moves like this and price targets like this, telling you how we can potentially profit from a move like this, for example. And personally, when it comes to trading moves just like this, personally, I like to take a lot of trades right now over on B2Next. So I'll make sure to leave a link to B2Next below this video in the description and in the pinned comment. And if you use that link, it'll take you to this page right here, which is an exclusive deposit bonus that you can only claim using that link. So if you simply just click that link to make your account and then deposit $100 and start trading, you get a $20 bonus. Or if you deposit just $500, you get a $100 bonus. Or if you deposit just 1,000 USDT and start trading, you get a $200 bonus straight into your new account. But that's only available if you use the link below this video to make your B2Next account and start trading on that account. So if you're going to be trading crypto anyway, you might as well check this out. Once again, first link below this video. And also, in case you're wondering, B2Next is a no KYC exchange, which means you can access it from basically any country in the world without needing any KYC. But for whatever reason, if you don't want B2Next, there is also Bybit as another exchange out there, another option that I also trade on. So I'll also make sure to leave a link to Bybit down below this video. And if you use that link, you can claim a 500 USDT position airdrop, but that's only available if you use the link below this video to make your Bybit account and start trading on that account. But with that being said, taking a look at this Ethereum chart right here on the weekly time frame, and right now, technically speaking, Ethereum can remain within a larger bull market, forming higher lows and higher highs on the larger time frames. And as always, during these much larger bull markets, we can see corrections and pullbacks and things like that along the way during the bull market, just like how during a larger bear market, we can see the occasional bounce back to the upside here and there during a bear market. And as of right now, this massive ascending line of support that we've bounced from multiple times during this bull market, as of right now, this line of support is sitting at approximately 2.6K. And if we're taking a look at this weekly Ethereum chart, right now the price of ETH is still potentially forming a massive bullish pattern known as an inverse head and shoulders pattern. And right now, all we need to see in order to actually confirm this pattern and set up a major bullish price target is simply just a recovery in Ethereum here in the price of ETH up towards the neckline at some point over the next few weeks or months, because remember, each one of these candles is one entire week. So even if it takes a month or 2 months or even just a few weeks, either way, if we see some sort of recovery back up towards this neckline, which is sitting at roughly around $4,000, and then if we see weekly candle closes above $4,000, that would confirm this breakout right here and confirm the pattern, which would confirm a massive bullish price target for this pattern. And in case you're wondering, that bullish price target would be sitting at close to $7,000 per ETH. So from the point of the breakout right here, from roughly around 4,000 to 7,000, that's more than a 70% move towards the upside, which could come next if we first confirm this pattern by first confirming a breakout above this neckline, which obviously as of right now has not happened. So right now, that possible price target at close to 7,000 is obviously not confirmed right now. It is not in play. So as of right now, I'll not be taking any action based on this pattern right here because we still need to wait for confirmation. And while the price of ETH is playing out a little short-term bounce here, we're also retesting this previous area of resistance, which also acted as a bit of support right here, but is once again acting as a resistance again, and that's sitting in between around 34.30 to 35.60. So as I've been saying recently on the channel, expect the price to struggle in that price range and find a lot of resistance, meaning sell pressure in that area right there. And so just don't be surprised if the price struggles or possibly sees another rejection from within this price range in between 34.30 to 35.60. But if we can finally see a confirmed breakout with ideally at least a daily candle close confirming back above around 35.60, in that case, the next major area of resistance to the upside is sitting in between around 3.9k to 4.1k. So for the bulls out there, 4.1k is definitely the level we need to break out above in order to flip much more bullish, not just expect a little short-term bounce, but much more bullish, because obviously if we confirm a breakout with candle closes above 4.1k, then we'll be confirming this massive bullish inverse head and shoulders pattern. And as for short-term support, of course, if we break out above this resistance, that would likely become new support. But right now, if we were to see a rejection from this resistance, we do have some support at just above 3.2k, close towards around 32.50 give or take, acting as support. And below that, we have this area of support in between $3,000 to 3.1k. And if we're taking a look at this daily Ethereum chart, right now this bearish divergence is technically still active, but it could be approaching an end. We could be getting close to the end of this bearish divergence because we're starting to see some early signs of a possible reversal, like for example higher lows in the price and higher lows in the RSI, which are some good signals to see, but not really enough to fully invalidate this bearish divergence, at least as of right now. And so technically speaking, this bearish divergence is still currently active, which means we could still struggle a little bit here in the short term, especially around this resistance. But if we break out above around 35.60, then in that case, there's a good chance that this bearish divergence will no longer play out, and we could finally start to see a bit more of a relief back up towards the high 3k price range and closer towards 4k as the next resistance. And if we're taking a look at Chainlink on the weekly time frame, right now the price of Chainlink, and over the last one day, confirmed a weekly candle close pretty much right on $21. So at least for now, we've not fully confirmed to break below 21, below this golden pocket, which is sitting in between around $21 to $23 approximately. But if we start confirming weekly candle closes well below $21, then in that case, obviously that would be a very bearish signal, at least in the short to midterm, as in over the next few weeks would likely continue to remain bearish if we were to break below around $21. And the next important support here in the short term below 21 is sitting at roughly around $18 based on these previous highs, so previous resistance becoming new support. And below $18, we have this level right here potentially acting as support as well, sitting at around $16. And below that, more support at just above $12. But obviously between now and then, we still have that $21 level to pay attention to. And as for resistance, we still have significant resistance at close to $31. And if we're taking a look at the shorter term for Chainlink on the 8-hour time frame, we're getting very close to seeing this breakdown. As I just mentioned, we confirmed the weekly candle close pretty much right on $21. So we still need to wait for a bit more confirmation here, but we're getting very close to possibly seeing a breakdown, which would confirm this short-term head and shoulders pattern, which a head and shoulders pattern is a bearish pattern. In case you're new to all of this, it's the opposite of an inverse head and shoulders pattern. And so if we confirm this head and shoulders pattern right here with a actual confirmed break to the downside below $21 with candle closes well below $21, then in that case, that would set up a short-term bearish price target at close to $15. So from around 21 to 15, we're talking about nearly a 30% move towards the downside as a likely outcome if we properly confirm the break below 21, which at least for now has not really happened. And it's also important to point out that right now we're possibly forming a bullish divergence pattern on the 8-hour time frame, with lower lows already confirmed in the price in the candle closes and higher lows potentially forming right now in the 8-hour Chainlink RSI. But as of right now, at the time of recording this video, this possible bullish divergence in the short term is not fully confirmed because we've not fully confirmed the higher low in place in the RSI. So we still need to see more confirmation here by seeing at least a few more green candle closes confirming initially to actually confirm the higher low in place like this in the RSI. And if that confirms, we can finally expect a bit of a bullish relief here in the short term. Usually a bullish divergence plays out in the form of either a slight relief, so bullish price action, or just some choppy sideways price action as the most likely outcomes from a bullish divergence. Basically the opposite of a bearish divergence. And right now, technically speaking, this bearish divergence is still active until we invalidate the bearish divergence. And an invalidation signal would be, for example, a breakout in the RSI above this line right here, and ideally into new higher highs. That would help to invalidate this bearish divergence. And of course, if we were were to actually confirm this new bullish divergence, that would also help to invalidate this previous bearish divergence, because obviously a bullish divergence and a bearish divergence on the same time frame would contradict each other. So the newer pattern would be the one that would overrule the previous pattern. And if we're taking a quick look at the price of Solana on the 8-hour time frame, right now Solana is still coiling up ready for the next major move. So obviously in the immediate short term, we're basically just chopping around sideways in a bit of a sideways price range, and really the overall sideways price range is in between this level of support and this area of resistance. So this level of support is sitting at around $180, and this area of resistance is sitting in between $200 to $205. So those are the levels of support and resistance to pay attention to in the short term. But other than those levels, we also have this ascending line of support and a descending line of resistance, and this ascending line of support is sitting at approximately $185, and this descending line of resistance is sitting at approximately $197 to $198. And so as I explained in my last video here on the channel, if we were to see a confirmed breakout above that line of resistance, so breaking out above around $198, then in that case that would set up a short-term bullish price target for this symmetrical triangle pattern sitting at close to $220, and then right at around 220 to around 223, around there we'll likely find some resistance. But obviously between now and then, we also still have this area of resistance to watch out for in between $200 to $205. So as always, even if we have a bullish price target, we cannot ignore other points of resistance. But of course, right now that bullish price target is not in play. It's not confirmed right now because we have not seen any breakout above 197 or 198, above this descending line of resistance. And now if we actually continue rejecting from that line of resistance and see a confirmed break below this line of support, below around 185, in that case that could set up a short-term price target to the downside at around 167. But if we're looking at a flagpole price target based on this being a potential bear pennant, kind of like a bear flag price target essentially, that will set up a price target at around 158, give or take. So essentially straight into this area of support as a likely scenario, in between around 156 to 161, potentially acting as major support based on previous price action. But before then, once again, we have this level of support at around 180. And remember, these bearish price targets only come into play, they only activate if we first see a confirmed break below around 186, 185 to 186. That would confirm these bearish price targets. And then between then and these price targets, we still have that level of support at around 180. And once again, if you want to trade any of these moves in the price of any crypto, check out those links below this video to claim those extra bonuses over on those exchanges. And if you want to actually know how to trade crypto, no matter if the price is bullish, bearish, or chopping around sideways, you can profit from all of that price action by watching these videos popping up right here on your screen. The video in the top left shows you how you can profit from bullish or bearish price action using long positions or short positions, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.